Welcome to the live daily analysis with Elite Currency, free during February. We're taking a look at the euro dollar and pound USD of the 24th of February. First though, please pause the video here to read the entire risk disclaimer. By continuing watching this video, you are aware of the risk involved when trading for exchange and you agree with this risk disclaimer. Let's kick off with the pound USD 4-hour chart. Very happy with the breakout that did occur to the upside as expected. We were talking about this throughout the week. Triangle pattern, strong and long triangle pattern. But the first break did occur right here with this candle. It was a small candle, so that's why we said keep the stop loss. And for our trading, we were looking at a stop loss below this low. And that was good because indeed a strong retracement did occur back to the 78.6 fib. If this would have been a big candle, 70 to 80 pips rather than 40 to 50, there would have been an immediate follow through most likely. Now there was a retracement and indeed a bounce yet again at the support trend line, I should say, and then another breakout which did follow through, and there was good bullish momentum found in that. So what we were looking at on an hourly chart basically was a hook back here to the 78.6 fib, as you can see. And yesterday I was talking about putting the stop loss below these bottoms. Then I tweeted that I was putting the stop loss at break even, below at the pivot, and below these strong bullish candles, because these strong bullish candles showed that price was either going to break immediately and go for a strong momentum, or it would fail again. And if it would fail again, I didn't want to have for my own trading the risk on the table, and I wanted to exit for break even. That's why I moved it to break even. I knew that if it was going to break out with momentum, it had to do now. Otherwise, another failure was too much to handle, right? This was not a failure necessarily, but it was a meek breakout. That's why we got a strong pullback. And the next breakout finally did push as expected, and it got confirmed. And we got a lot of good pips there, from 124.40 up to all the way at 125.60, a potential of 120 pips. At the moment, I have my stop loss below here, below this fractal, and I have it around 125.30. So that's where I have the stop loss at this moment, and that's where I'll keep it. Even if price were to retrace deeper, that's fine. What I'm expecting at the moment is for price to make a bit of consolidation here. It just hit the minus 61.8 target. I think it's going to make some kind of flag like this. If it does make a flag, I think there's a good continuation for more upside. If you look at the sequence levels, the fib sequence levels, price has just reached the third level, broken a bit above it, in fact. So what I'm looking for is price to make a pattern here. It is Friday also, be aware of that. That's always a tricky day. Probably next week for price to continue above the third up to the fourth level from to the R2 weekly pivot point, although that wouldn't be there next week, the minus 100 target, and the fourth sequence level at around 126, 126.35, and perhaps even acceleration to the fifth sequence level at 127.75 here, as you can see. So those are the bullish spaces available. This is actually pretty exciting. The space between 3 and 4 and 4 and 5. Once again, let me put those numbers on. Sorry, this is 3, this is 4, and this is 5. Are huge, typically, relatively for an hourly chart. So I would like to catch that action. I'm looking for continuation next week between 3 and 4 and 4 and 5, up to 126, then 127, then 127.75. I do want to see a consolidation here first. Euro dollar made the upside as expected. It missed by 5 or 6 pips the S1 that I was looking for, and the head and shoulders, inverted head and shoulders pattern that I think was about to develop. So although it missed it by 5 to 6 pips, I think the analysis did prove itself correctly. The euro dollar was bullish and was making a reversal. There was momentum here. There was a head and shoulders reversal pattern, and there was divergence between these bottoms. So I did expect a bigger correction, and that's what happened. So that's good. And price did hit the minus 272 target, as you can see. When putting the fib back to the original swing high, swing low, you see that there was a 50 bounce almost up to the minus 272 and a pivot point at 106. That was the target, the first target. Now, I think there could be an ABC correction. There's a bit of a rising wedge chart pattern here at this moment. I do think, though, that looking at the 4-hour chart, you can see that this swing high, swing low is over. So this is a new leg, a new swing. Therefore, I do think that there's a good chance that there will be a bigger correction back to R1. Price does need to break above the pivot point, the weekly pivot point, to go back to R1 at the previous top, and there could be a correction like this. There is a downtrend here, so at that point there could be a continuation of the downtrend at the R1 or at the R2. Those are good swing points to keep an eye on for, in our opinion, swing trades to the downside as a continuation of the downtrend. At the R1 and R2, we could put a fib on as well to look for confluence, and you would see that that is a 50, 61, and 78.6 fibs. Those are good resistance spots for swing points for downside. For the moment, though, I think that we have a good chance of more upside as a retracement, and I think that price could do that. If price makes a bounce down, there's a good chance for it to make a continuation up to the -2.7 and the -61.8 and the R1 on the hourly chart. So I'm looking for correction first before we get that bigger upside, and I think rising wedge pattern plus there could be a zigzag correction down to, for instance, 38.2 fib. If we put a fib on the entire swing high or only part of the swing high, there's confluence at the 105.50, 105.60, the 38 fib, the 61 point fib. I think those could be a good spot for a move up to 106.25, and then perhaps 106.50, and then perhaps 106.80 there, right? Another confluence spot could be 105.40, the 50 fib and the 88.6 fib. I don't expect price to break below the S1, the weekly S1. Because if it does that, then I am not so sure about the bullish bounce anymore. That could be actually still not totally in a downtrend, but that could be an early sign that depending on how price breaks, what kind of momentum and what kind of pattern correction occurs after that, it could be ready for more downside after that. But I'm definitely in a cautious mode if it breaks below 105.30 and below this S1. If it stays above it, especially if it bounces at the 50 to 38.2 fib, even the 61.8, those I think are good bouncing potential spots. I'm looking for candlestick confirmation patterns in this fib area for that upside like this. If it fails and breaks through it, I'm cautious. Of course, if it breaks below 105, I'm bearish. I will look for good momentum candles followed by a correction for more downside. This is something that we'll analyze again, I guess, on Monday, when that occurs, if it occurs, of course. For more live daily analysis, check out our website, elitecurrency.com. Go to Trading Systems, click on Live Daily Analysis for February. And, of course, you can already reserve your seat for March and the next 6 months, in fact, by going to that particular page and following the instructions right there. You can then secure a spot by going to Live Daily Analysis here, secure access of it for 6 months, and join our membership. Thanks, and wish you good trading. Cheers.